Gold prices closing above $4,000 an ounce for the first time ever. At an event in Connecticut yesterday, legendary investor Ray Dalio said that the current economic environment reminds him of the early 1970s, when inflation, heavy government spending, and high debt loads eroded confidence in fiat currencies. He suggested people should consider allocating 15% of their portfolios to gold. This morning, gold is up another 1.3% to $4,056 an ounce. And joining us right now to talk about it is Bart Melek. He is Global Head of Commodity Strategies at TD Securities. And Bart, you think that there could be quite a bit more room for this to still run with this, correct?
Yes, I do. And I think 4,400 in the first half of next year is quite possible. In fact, I think it's quite likely. And that, of course, implies that from a trading peak, that could be a few $100s higher even.
What do you think's driving prices at this point? Is it concerns about government spending, a fear of getting too involved with government debt? Do you think it's momentum? What's really driving the trade at this point?
I think at this point, it's probably all of the above. There's certainly a lot of momentum in this trade. And, on many measures, it looks a little bit overbought. On the other hand, we have the U.S. government shutdown, and at this point, I'm not quite sure anyone knows when this is ending. And that implies that the U.S. economy may suffer as a result, which could trigger more aggressive Federal Reserve easing, and that means a lower carry for the metal. So a lot of discretionary prop traders could be a lot more comfortable positioning in it. And there is, of course, that whole inflation problem where we could be seeing easing monetary policy at a time where inflation is likely to move significantly more above the 2% target. So all those things, I think, are getting people to think that gold is a good hedge, as it almost automatically reflects inflation, because it requires real resources like labor and productive capital to get out of the ground.
So you think that gold is going to push higher from here, but you also say it's showing signs of being overbought. What are those signs, and what's the potential downside if it is indeed overbought?
Yeah, technically, I think, there is probably resistance building at around 4150 or so. We are well over 25% over the 200-day average. The RSIs are printing 90 here, meaning that it is quite effervescent at this point. But I do also say that any correction is not going to be a rout. It'll likely be a bit of a consolidation, maybe a couple of $100 lower, maybe 3600 technically. But after that, if we continue to see these massive deficits build, Federal Reserve that probably will be somewhat, quite a bit more dovish come May, and continued central bank buying, which has been well over 1,000 tons since 2022, could lead this to well over the 4,000 mark, to the 4,400 plus.
Bart, we're almost out of time, but what do you think would cause a correction potentially in gold prices?
Ironically, a benign government settlement where a lot of these risks go away, and the Fed is less worried about the economy.